So I know this is the post-lunch blues, but if you stick with me and don't take a nap even though it's very dark, I will show you not just a great example of AI-driven corporate strategy, but how you can use Quid to help your own individual brokerage account if you want to trade on some really interesting stocks. So M&A strategy, competitive insights, we spend most of my day thinking about what's going to come next. So one of the big opportunities for us is to try to make predictions and get out ahead of things before they happen. So we'll talk about how we typically do that. Then we'll talk about how Quid has really helped us build a much more data-driven approach. And then finally, I'll show you the results, what we've built, what we've done, and hopefully you'll agree with me that it's a pretty great example of AI strategy. So first off, for those who don't know about the semiconductor industry, we've had a lot of consolidation in the last few years. I won't bore you with all the reasons why, but as the chart clearly shows, you can see the volume and aggregate value of deals has skyrocketed over the last few years. So if you look at the early 2010s, an average year had around $15, $20 billion of M&A. But all of a sudden, starting in 2015, now it's closer to 100. And then there's some mega deals that are about to happen or were going to happen. And that would have pushed you to closer to 160. And we're still trending above average the last few years. And the line at the top shows the combined market share of the top players in the industry. Okay? So if you add up their market share, over time it's grown from around 38% to closer to 50%. Now, this is particularly threatening if you're the number one player in the industry and all of your competitors, your number two is buying number four and number three is buying number five, all of a sudden your number one position is a lot more threatened. So our board and CEO came to my team and me and said, hey, these deals, they're kind of surprising us, right? Why are we shocked when company A goes and tries to buy company B? Like Broadcom and Qualcomm, if you haven't heard those names before. Broadcom tried to buy Qualcomm. It would have been one of the 5 biggest M&A deals in history. Okay, so why are we surprised by these things? So they asked us to build a much more proactive and robust M&A strategy to try to say, hey, what do we do when A buys B? How do we get in front of it? What are the things we should be doing now if we're worried about A buying B? So that's what I got tasked with. And like any good strategy person, I went and Googled, and I talked to bankers, and they all kind of said, yeah, A might buy B, Broadcom might buy Qualcomm, TSMC might go buy Global Foundries, and yeah, there's a bunch of deals that could happen. The problem is it's not very scalable, right? Because you're relying on a lot of human research. So we wanted to try to figure out a way that we could do this ourselves. We could scale it. We could make it quantitatively driven versus rumor and anecdotes. At the time, we had a relationship with Quid. We had a big contract with them where we had a consulting team and access to this great tool. But we wanted to try to find a way to kind of up-level our work rather than random analyses. I really wanted to build more of a capability, a repeatable tool that we could leverage whenever we needed it. And so I sat down with the Quid team and gave them this problem and said, hey, we got to find a way to leverage the tool. I think we can do it. You guys are doing some really interesting work. Let's put our heads together and come up with a data-driven solution where we can leverage your NLP technology and build a much more data-driven framework to predict M&A before it happens, which is a pretty big task, right? Big M&A is inherently unlikely, all right? It's not every day we see 10, 20, $50 billion acquisitions happening. So you're trying to find a very unique event in a sea of all of the companies on Earth, right? Any big company can go buy another company. So you're really dealing with a needle in a haystack problem. Thankfully, through a lot of trial and error and a lot of my pushing the Quid team, I would say, in a friendly way, we got to something that I think is really unique and really cool. There were 4 key ingredients in this tool that we built. The first thing we leveraged was Quid's existing data set, right? So the out-of-the-box Quid platform that has access to all the news and blogs, all the company data. That was the building block, right? So that was out of the box. That was easy to use. And thankfully, we had our contract and subscription. Didn't have to do anything unique there. So that's easy. Started to get unique when we figured out what we call our M&A methodology, where we try to find co-mentioned companies. So what I mean by that is company A is mentioned in the same article in the same breath as company B, whether they're competitors, partners, customers, joint venture, et cetera, et cetera, et cetera. We use the Quid tool to start to find those relationships. Because as you can imagine, before a company buys another company, they have some pre-existing relationship with them, right? They're either in the same industry or, like I said, competitors and so on. So we're looking for those co-mentioned companies. And of course, I'm dumbing down all the technical stuff, but like I said, I think of it as, imagine they're both in the same article at the same time. The next thing we did is we started to pull in more quantitative information. So we did a study of all of the acquired companies over the last 10 years. And we've got a baseline of the average acquired company has X leverage. They have Y EBITDA. They have Z revenue growth. So now we know what an acquired company looks like financially, okay? And then the final thing we did, we didn't quite kick humans out of the process completely. We still rely on our Intel employees to provide a lot of subject matter expertise. The one thing Quid doesn't have, and I don't expect them to have, is a lot of semiconductor expertise. In fact, I don't expect anybody to know anything about semiconductors. Although you're all our customers, thank you for that. Buy a new PC, please. We still rely on our subject matter experts inside of the company to say, yeah, that doesn't quite make sense, or, well, actually, you need to adjust here and there. And so it's more tweaking the results that come out of the tool. So our people still feel very much involved. All right, so here's the M&A predictor. This is what we ended up building. 3 key inputs. The first is trying to figure out what is a company's M&A criteria. So what are they buying for, right? Are they trying to enter a new industry, a new market? Are they trying to vertically integrate? Are they trying to buy a competitor? So on and so forth. So figure out what's their shopping list. What do they want to go get done through M&A? And then the second step is finding those co-mentioned companies that I was telling you about. So we call that prospect companies. So the Quid tool goes out and does all its NLP on all the news articles. We also pull in analyst reports. So when JP Morgan publishes a newsletter or an analyst report, we pull that in. We also pull in earnings transcripts. So when Jeff Bezos every quarter reports out the company's results, we pull in all of that textual data as well. So we have a really big, robust pipeline of text data to read. And then the third point is those financial indicators. So how similar or dissimilar is a particular company against the average baseline acquired company? Now, we do this from the perspective of the acquirer. So imagine we're Intel, and we want to go figure out, a company you guys are all familiar with, Netflix. So we put Netflix at the beginning of this funnel. We say, all right, what is Netflix's M&A criteria? Who are the prospects that best meet that criteria and have that pre-existing co-mention relationship? And then how well do those prospects score against the financial indicators? Okay? So those are the 3 main steps. It results in a number of scores, and we put that all together, and we give it an acquisition likelihood score. All right, so what does that result in? Well, we started to do some back testing because if your bosses are anything like mine, they want to know, why are we doing this? Is this actually working? Is this accurate? So these are the results of our back testing. What we did is we looked at 15 big M&A deals in tech over the last few years. And to handicap ourselves, we only used data that was greater than 1 year old from the date of the announcement. So imagine a deal was announced on 1/1/19. We only used data that was older than 1/1/18, right? So we gave ourselves, because imagine rumors start to break out in December, CEOs are meeting at Davos or wherever the rich people congregate. We handicapped ourselves 1 whole year and said, Could we have made that prediction? Could we have predicted that acquisition? So the first test we ran was, well, does the target fit one of the strategic criteria we set up, right? If we look back at the steps, right? The first step, identify M&A criteria. So all 15 targets met the buying company's criteria. So Amazon Whole Foods, the first one on that list. Whole Foods met one of Amazon's shopping list, one of their criteria. The second column was, did we find it a year out? So 13 out of 15 times we did, which is, I think, a pretty remarkable hit rate. And it's even more remarkable when you compare it to the final or the third column, was, did somebody else talk about this beforehand? Right? If I was sitting at my desk and I was Googling, could I have found someone talking about Amazon buying Whole Foods? And in a number of cases, yeah, absolutely. But as you can see, in a number of cases also, nobody was talking about the deal. And we still found it. We still made the recommendation, like Microsoft LinkedIn. It wasn't rumored, it wasn't mentioned anywhere in the press 1 year out, but we were able to predict that Microsoft would go buy LinkedIn, or that it was a high likelihood of acquisition. And the final column shows you, out of all of the prospects we gave for the buyer, where did the target rank? So, Amazon Whole Foods ranked as number 8 on Amazon's shopping list out of the 16 deals we identified for them. But if you start to go down the list, Disney, 21st Century Fox, number 1. Microsoft GitHub, number 1. That was a real shock to me. Verizon Yahoo, number 1. SoftBank Arm, that was probably the most shocking result. If you know anything about SoftBank or Arm, SoftBank's a big telecom company with a big investment fund out of Japan, and they're buying a semiconductor company. Nobody saw this one coming. In fact, I remember when it got announced, given my job as M&A strategy, I had to figure out, why are they doing this? How does this impact Intel? If we had this tool, we would have predicted it a year out. So here's what the output looks like. This is what we prepare for our executives to show them what is the particular competitor's M&A playbook, as we call it. So on the right-hand side, you have their criteria. Again, here's what they're buying for. Here's their shopping list, ranked in order of how important that criteria is to them. Okay? So the number 1 criteria, number 2, and so on. Then all of the bubbles are the different targets. And they're plotted on the y-axis by that likelihood score. And it's important to note, this is all relative. So the relative likelihood of Xilinx, of Broadcom buying a company called Xilinx, is higher than the relative likelihood of Broadcom buying Mellanox, for example. The humans score them, right? We still use our humans on the x-axis based on how impactful it would be to Intel. So how much should we care if Broadcom goes after this particular company? And that's important because now we look at this and say, all right, well, that Xilinx company, we should figure out why they're so interested. Should we be thinking about them in some other way? What will happen if Broadcom buys them? And start to put in some competitive responses before it happens. So this was the very first or second one we did, and we did it because Broadcom's a real active buyer in our industry, so we wanted to test it out on them. And they're in an interesting spot because they're facing a lot of regulatory challenges. They're having trouble buying new semiconductor companies, and so they're a really interesting company to think about and what they'll do next. But if you look at this, it's kind of shocking because we actually predicted the deal. They bought a company called CA, which is a software company, on July 11th. We prepared this in June of 18. And I remember when this deal happened, I was sitting with my boss, our chief strategy officer, and she got a call from our CEO saying, why are they doing this? Analysts are freaking out. They're downgrading Broadcom stock. That doesn't make any sense. And the whole time sitting there like a kid. It's right there. We had it. Guys, we had it. We had it months ago. We could have told you about it. We could have told you why. Look, it meets their number 2 criteria. They need to move into the software business. Okay? So we were predicting it before it happened. We had it right. Our very first one out of the gate, which unfortunately set a way too high precedent and bar to clear in the future. So we kind of were foisted on our own petard on that one. But we predicted it, and I couldn't have been happier. And we've predicted a number of deals since then. So these are the most common targets that we identified, right? If you take all the playbooks we've done, which is about 14 to 20 at this point, and you look at what are the most frequently mentioned targets, right? What are the most popular targets to be bought? Out of the top 12, 4 have been bought. we're responsible for the number 2 company. We bought number 2 on that list. IBM bought Red Hat, NVIDIA bought Mellanox, and I can't remember who bought Cypress. But 4 out of 12, we predicted months in advance, right? You can see the date we forecasted it. And you can see, if you want to make some money on this kind of information, I don't know if this is insider or not. I think this is all public, so I think we're okay. The pre and post stock price, right? Because when a company gets acquired or rumors of acquisition are afoot, their stock price goes up, right? So the companies that we're predicting to get bought, their stock prices are going up quite a bit. And if you really want to have some fun, you would compare that against an index like the S&P 500, and you would see our portfolio of prospect companies is outperforming the S&P 500 by 2x, right? So if you just took the companies that we were predicting to get bought and traded on all of them, you would beat the S&P 500 2x. All right? Yeah, that really excited me. I got on my Vanguard account immediately. I'm like, well, wait a second, there's something here. But of course, we're not a hedge fund, unfortunately, or at least I don't have my own yet. So our bosses are asking, well, so what? And like, yeah, that's cool, and you're doing some really nifty stuff, but what does that mean to me? How does that help me run our business differently? So we had to make a slight pivot and find other ways that we can use this information. So first off, not just M&A, right? But we can use this to quickly distill a company strategy down to a few bullet points in a much more automated fashion. If you just took that strategic criteria, that's more or less what the company wants to do. That's their strategy. So that information by itself is pretty valuable, I think. But most importantly, we're now using this information to help our business units find potential investments, okay? So we said, well, hey, if we can use this on a competitor, why don't we just turn the tool on us and let the tool make suggestions of companies we should be looking at for investments or acquisition or partnership or so on. And I really love this quote from our gaming team, right? Best use of AI they've seen so far. And while we're not, curing cancer or shooting down drones using AI, we're giving them something they can touch and feel and use and make their lives a lot easier. Because if you're a business development manager or an investor or even a strategy person in a particular business unit, you can use this tool to figure out things you should be looking at. The magic of our relationship with Quid, I think, is the team that we have. So we're able to do a lot of continuous improvement. We continue to tweak and improve our model over time. We're adding a couple scores that I'm really excited about, particularly for private companies. We're starting to look at IP, and we can use Quid's patent database for that to see how well integrated would a target's IP be with the buying company, right? So if the target has a bunch of IP that the buyer doesn't have, we would give it a higher score, right? Because those would come together. The other thing we can start to do for private companies is look at the founders and see how well they've done in the past with their companies that they've launched. We can look at the founder's background and start to pull in even more and more textual data to make the private company scores even stronger, right? Because there's a lot less information out there on them. And this partnership that I talked about, this team that we have, it's also resulted in something I think is really cool, where we've now put together a go-to-market partnership on this tool to start, where we as Intel's corporate strategy office, we can kind of brand ourselves as being AI-enabled, but most importantly, because I always feel like I have to justify my salary, right? I'm a slide jockey and I get paid per deck I make. I can actually help bring in some revenue, maybe, if you guys could sell some stuff, Ryan. We can actually generate revenue through this tool for Intel. And it's small, and sure, it's not a PC, but it's actually monetizing data, which, for Intel, that's one of the big things that we're working on is becoming a data company. And how do we monetize data? That's not the business we're in. So this can be a great example of that. We're using both of our connections, right? So Quid obviously has a ton of contacts. I tap into my network of other corporate strategy teams and bankers and consultants we work with. And we actually have joint sales meetings together where we go in and I can talk about here's all the work we're doing and then here's how the Quid tool can help you. So I think it's a really unique partnership that we've put together through this tool. So to wrap up, we've done about 18 playbooks so far. We've identified about 6 acquisitions with a relatively good level of accuracy. And we've had this great return on our acquisition portfolio. It gives us a much better picture of our competitors' moves, whether it's from an M&A standpoint or just their strategy, right? Because we get that strategy distilled quickly. But especially as M&A is a huge tactic in the semiconductor space, as consolidation happens around us, it's really critical for us to have access to that kind of information before it's too late, right? Before the board or the CEO frantically calls us saying, why is Broadcom buying Qualcomm? What are we going to do about this? Why didn't we know about it before it happened? And then finally, it helps our business units, right? It helps them identify potential areas of growth. It helps them identify potential competitors. And for Intel, a company that is really big and really old and isn't really growing as much anymore from a revenue standpoint, we're really focused on where's the growth going to come from? What's the next business that we're going to try to get into? So this gives our BDMs, our GMs who run business units, a shopping list of companies to go look at that can help them grow their business. So with that, that's all I've got today, but happy to answer any questions. Thank you.
Thank you. I'm Shamara Hernandez from Oliver Wyman. This is really cool.
Thank you.
I'll just start with that. So I guess I'm curious, like the use case, I definitely understand like the need to understand more about like M&A. Like I understand why you guys are asking the question. I'm just curious, how did you decide to start the process of using Quid to answer the question? Because as a user, it feels like a little like beyond a lot of the use cases that I would have thought of first.
Yeah, absolutely. I think, we had Quid for a long time. And to be blunt, my feedback to Quid is, yeah, it's Google on steroids, and that's great. And that helps me get shortcuts to some searches. But ultimately, it's got to drive bigger impact than that. I've got to be able to do more than just build a fancy chart or the network thing, which is cool, but you show that to an executive and their eyes glaze over and they want to strangle you. And why are you using so many colors, right? Like, what, is this fuchsia? What does the fuchsia mean? So we had to get away from the networks and we had to get away from these cool fancy graphs and just give them information they needed. Why Quid? Because I knew we could automate what I was doing on my own, right? I'm Googling, right? And if this is Google on steroids, and Quid folks don't take that the wrong way, why can't we just do what I would do at my desk and do it in a more efficient, scalable way? So it was really a matter of, thankfully, like I said, we had this consulting relationship with them where we can sit down and pull on them and say, hey, look, here's this problem I've got. I think we can apply Quid here, right? So it took me a little creativity to say, wait a second, I think I can automate some of this, and then kind of balloon from there and like, oh, well, yeah, what if we add that? What if we add this in? What if we add in the financial indicators? Oh, yeah, that's a really great idea. So it just was kind of a brainstorming session where we took a problem that I knew we could automate and kind of grew from there.
Nitin Gladi, for the competitor M&A strategic objectives, do those come from a data source? Do those come from your team?
No, so they come from the data source. Okay. Basically, when you imagine Jeff Bezos gets on an earnings call and says, yeah, we're looking to grow our footprint in India or China. Okay, that's interesting. Now, what if that gets mentioned 10 times? And what if it's mentioned in the Wall Street Journal? What if it's mentioned in an analyst report? Amazon needs to grow India footprint or China footprint. Okay, the more often it's mentioned, now it's becoming more strategic, more important for them. So it comes out of I don't want to say it comes out because there's no database we pull it from. We build the network essentially, right? So the fancy graphs, those are all still in the background where you're building a network, and the bigger the network, the more nodes in the network, we say that's a more important strategic criteria. Yep. Yeah.
Beth Browdy from Mercer.
Hi.
Once you've identified targets, or the ones you're thinking about acquiring, actually, is there a way that you can then use Quid to look at the cultural match and the kind of intangibles that you need to know about?
No. And again, thinking about M&A in general, that's one of the hardest things to figure out, right? Because how do you really, company A and company B, how well or how strong or weak of a culture match they'll be, I think is a problem that I don't know if we can set AI on just yet. But yeah, so no, we don't look at the cultural match at all. It's not a score that we bring in. I think when you start to see things like the IP, maybe that's, a way to start thinking about that. I mean, we could do like Glassdoor, use the Glassdoor databases and try to do stuff like that. But no, we don't really touch on the cultural angle. Yeah. Yeah.
Matthew George from George. The model you eventually settled on, how many iterations prior to that? Like how many dead ends did you go down roughly?
We went through I don't want to say dead ends. We hit quite a number of, hey, wait a second, that doesn't make sense. Are we over-indexing on something? So for example, one of the early ones that we ran suggested, we did it on Fox or Disney, I can't remember, on an entertainment company. And it made a suggestion to go buy this Viacom or something even bigger. Like it suggested like a $200 billion deal. I'm like, wait a second. The acquiring company doesn't even have that much money on their balance sheet or debt capability. This doesn't make any sense. Oh, it was Orange, the French telecom company. I'm like, wait a second. I know Orange. And the Quid team didn't know this, and that's fine. Again, that's where I'm supposed to come in as a subject matter expert and say, wait a second. This doesn't quite line up. So then we added what we call a company's war chest into the financial indicators. So we say, all right, here's how much net debt the company has. Here's how much they can lever up. And we will mark down any company that exceeds the buying company's war chest, right? Because it's less financially feasible to go buy them. So that was something where we realized pretty soon, like, hey, wait a second, we've got to add a buying capacity score here. Yeah.
I'm John DeYoung from EY. You say the solution is automated now.
Yes.
What do you mean by automated? How automated is it, and how much is Quid involved versus you're keeping it in-house?
Yeah, so that's one of the big things that I've been pushing Quid on is we've got to make this more rapid, right? We've got to be able to turn around a playbook more quickly than what we've been doing. So right now, I think we can get the process down to about a week and a half from start to finish. And it largely dependent on how responsive we are to their questions about, hey, does this make sense? Is this data right or not? But eventually, I really want to get it to, real fast, where you type in a company as a buyer and say, all right, here's their target list.
Julian Allen, PepsiCo. So there's a lot of interesting research out there about CEO demographics and board demographics and how that impacts their risk aversion towards MMA and stuff like that. So I was wondering if you've included any of that data in the model or planning to include it in the future.
So say the first part again. What kind of data?
So CEO demographics and background, or the board itself as well, and their like risk aversion towards that.
It's a good question. It's not something that we've thought about, but it'd be an interesting idea. Yeah, and I think it goes again to the culture stuff, right? Like how likely is this company to do deals? Like NVIDIA, for example. NVIDIA is still run by their founder, and in the past they'd never done M&A, right? So in theory, we could put that kind of data in there. But then they just did a deal recently, a $7 billion acquisition of a company called Mellanox. So yeah, it's part of their DNA, I guess, until it's not. But yeah, that's not a bad idea. Yeah.
Hey, Tom Burns, Control Risks. I was just asking, do you ever use Quid for the next step in terms of seeing if the deal's going to go ahead? Sort of like a CFIUS look at it or something?
No. So the one thing I always tell people, like, we're not lawyers. We're not trying to make judgments about what China's going to. You tell me, right? So no, we don't judge regulatory. We just tell you, look, here's the company shopping list. Here is the relative comparison of deals that would make the most sense for them. But since big M&A is so inherently unlikely, as I said at the beginning, we're not making any judgments about when or which one of these. We're saying this is the list, and you as the business unit owner, you can choose to react to it or not.
So there's a lot of criteria when you determine these M&A targets, and there's a lot of signals that come with that, right? So how do you categorize those signals into different criteria and data sources? Like, okay, this article or this data source is talking about this criteria.
Right.
And how, yeah.
So one thing on the data sources is we rank up legitimate news sources and rank down things like Seeking Alpha and blogs, essentially. We also rank up earnings transcripts, analyst reports, anything that we consider professional. But I think there's a far more technical answer to your question. And for that one, I think we should chat with some of the Quid folks after, and you can dig into all the math behind it. Yeah? All right, thank you. All right, thanks, guys.